This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news of an export setback in China that may signal a tougher path for them for the rest of 2024. But first, this week we'll kick off the US earnings season, which will run for a few weeks until the first quarter 2024 results are all in. Bank profits will be early in this set, many key ones coming this week. The Americans will also release retail sales results and some housing updates this week. Retail sales updates will also come from China, along with their first quarter 2024 GDP outcome tomorrow. It is impressive that they can report that well before any other major economy. Eyes will be on their foreign direct investment data too, along with housing market activity results for March. And Australia will release its labour market data this week, and CPI inflation data will come from Japan, Canada, and of course New Zealand on Wednesday. Over the weekend, China reported its new bank lending levels, and they picked up in March from February, but the results still disappointed. March is usually a strong month for borrowing because banks tend to extend more credit at the end of each quarter to meet lending targets. But the 3.1 trillion in new yuan loans in March lending was less than the 3.6 trillion expected and the 3.9 trillion in March 2023. Meanwhile, China's exports tumbled in March. They dropped 7.5% from a year ago, reversing sharply from a 5.6% growth in the earlier month. This was very much worse than markets forecast, highlighting the Middle Kingdom's uneven recovery and perhaps suggesting global demand won't drive growth there. It may also be a sign that de-risking from China, because of its terrible recent signals to investors, is biting harder and earlier than anticipated. But it's not all difficult news in China. A survey shows that for the first time since the end of 2021, wage growth rates are picking up again. India's industrial production rose by 5.7% in February from a year ago, but that missed analyst forecasts of 6% growth. However, it was a faster expansion than in each of the prior 3 months. A year ago, this expansion was running at 5.8%, so a little changed on that comparison. And it's only now about 200 days until the November US presidential election, and nervousness about that outcome is starting to show up in sentiment surveys. Consumers are apprehensive that the golden run could be crashed by the vote, or that things could destabilise ahead of it. The University of Michigan Consumer Sentiment Poll is now reflecting some of that apprehension. However, it is only off a 33-month high, so we shouldn't make too much of this April dip, and it remains more than 20% higher than year-ago levels. Still, the shift was noticed by financial markets. Wall Street dipped in their Friday session, bond yields slipped slightly, and the US dollar surged against all comers in a risk-off mood. The US Treasury 10-year yield is now at 4.52% and unchanged from Saturday's close. A week ago, this rate was 4.39%. And the price of gold will start today lower by $6 from this time Saturday at $2,343 an ounce. We should note that this price hit an all-time high of $2,432 an ounce at about 4 a.m. Saturday morning, but it's been sharply lower since that. Despite extreme Middle East tensions, oil prices have been surprisingly stable over the weekend and still just on $85 a barrel in the US, while the international Brent price is 50 US cents lower at $89.50 a barrel. Both levels are about $2 less than a week ago. And interestingly, the head of the IEA strongly criticised European energy policy for two monumental mistakes. First, relying on Russian energy, and second, shifting away from nuclear power. The Kiwi dollar starts today at just over 59.3 US cents and down 10 basis points from Saturday. Against the Aussie, we're unchanged at 91.9 Australian cents. Against the euro, we're little changed as well at 55.8 euro cents. That all means our trade-weighted index starts today at just on 69.2 and similar to Saturday and this time last week. And the Bitcoin price starts today sharply lower at $63,785 and down 5.6% from this time Saturday. At one point, it got as low as $60,908. Volatility over the past 24 hours has been extreme, at just on plus or minus 5.2%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.